Hi, this is David with EminiTradingStrategies.com. You can see over on our left we are at a no zone. So one of my favorite trades is to take an EET, that's an early entry technique, and that would be a short trade. And as soon as we get the little white dot up here on the right, we'll take the trade right around 50. Now I like this trade. It's more of an aggressive trade, but it has a better risk reward. Okay, it looks like we're going to get ready to fire off here. And that's because the next NSC, if it happens, is a high probability setup. Let's see, it looks like we're gonna fire off an EET here. So let me get ready. Here we go. Let me place the order. I got an order in limit at 3.5. Let's see if we can get filled. Okay, and I like this trade. Over to the left again, we just came out of no zone. The trade, the NSC that comes out of no zone is a higher probability NSC. So by taking the EET right now, I could take more profit off the EET. Okay. Of course, I got to be filled on the EET first, and then we're hoping that we get the NSC on the longer term chart. Okay, so this is an example of one of my favorite trades. I hope we can get filled. I'm going to give it a little bit of time here. If this bar closes, oh, here we go, we're filled. Let me take my stop loss where it needs to be. Got filled at 350. We're risking 4 ticks on the trade. Right now I've got 5 ticks of profit. Be a nice little trade. But if we get the NSC, yeah, I'll take it down a couple more ticks, try to grab 7-8 ticks profit off the trade. Okay, so you'll see there's also an X there, right there, the pullback trade canceled. That's a long trade. Okay, sometimes you're in the same position where you've got a long trade and a short trade, pullback or an EET. They're both valid. 70% of the time when they're both valid, they'll both be winners. Right now the pullback's not valid as it canceled, meaning it's less likely to move back up. So I'm happy we're short the EET. But let's pause here in a second and let this trade cook, and we'll see if we can get the NSC. Okay, we are waiting for the NSC. There's another long EET that happened. Okay, we avoid that trade because we're short the EET, so anything against that we don't worry about. It's just a disregarded trade. So if we get a short NSC, then we will we'll take a couple more ticks off the trade. We'll move it down and try to grab 7 ticks off the trade. So we've already got 4 ticks right now. Nice little income trade, looking for 5 ticks, but if we fire off the NSC, it's a higher probability trade. I will try to get more off of it. So I'm just ready to move it if we get the NSC. It looks like it's getting ready to fire off. And this NSC, if it happens, is a higher probability setup, which if I weren't in the EET, I could jump in the NSC. Here we go. Let me take this down. I'm going to make it filled. Nope. Okay. So it already touched my profit. I moved my profit down a couple quick ticks. Okay. So this is the glory of this, is that if you take the EET before the NSC, by the time you get the NSC, I'm going to move my stop loss, we've already got 4, 5, 6 ticks profit on the NSC, and we can still take the profit off the NSC. Now, I'm just going to take 2 extra ticks if I can get it. It bounced there off 1102, but you can see the power of the EET when you're coming out of no zone. The risk reward was slim, and now we're not risking anything on this trade. The NSC is a higher probability trade, so chances are likely that I can make 7 plus 8 ticks, 7, 8 plus ticks off this trade. In fact, I routinely use this setup to recover from. Okay, I'll take 8 to 12 ticks off these trades. The downside is that we may have not had the NSC and the market bounced up and then we lose 3 or 4 ticks. No big deal, it's worth it. Okay, so let's see if we can bounce down here and hit 1101.75. Keeps hitting 1102, kind of wait to see if it wants to break through. So I do have my stop loss moved as well, so if it does bounce back up, we get stopped out even. Hey, water under the bridge. Well, you can say, well, we had 5 ticks, 6 ticks, it was all right there, you could have had it, it's a nice trade. But what I'm illustrating here is that if you've got a good potential trade, and in other words, if the trade's a higher probability trade like this one is, stay in for a little extra. We jumped in on the EET, so we got in 4 or 5 ticks better. Don't be afraid to take the extra couple ticks. This is what I teach in my day trading course. Okay, this is a great recovery trade, right? If you're trying to recover from a loss, this is a good trade. If you want to make more than a point a day, this is a good trade to be taking. Okay, so we are still short. We'll just see if we can come down here to 175 and get filled. Here we go. Looks like it's going to drop down. Be a nice 7 tick winner. May even be able to go for more, but I'm not going to push it. 7 ticks is a very nice trade. That's about double what I try to make in a day, right? But I'm using a higher probability trade, NSE, and I got in early on the EET, boom, we're off. Okay, there you go. It did hit a full 2 points. Don't know if it would have been filled. It just touched there, but very good example of taking an EET out of no zone and staying in the trade because we get the corresponding NSE. So thanks for watching.